Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Tuesday, August 1st, and then we'll see how things look for Wednesday, August 2nd. We had a down day. There are some signs of weakness that might be creeping into the picture, but so far the market seems to be holding up fairly well. One thing I want to say is even in the condensed version of the video, I am playing around with the thumbnails on the full-length videos. If you wouldn't mind taking a look at some of those, and if you have any feedback for that, let me know what you think. Every day this week, I'm trying a different thumbnail, and I want to see which one people seem to like. Let's go back and talk about what happened. As far as some comments that we can make, a company named Fitch, there's three big companies. There's S&P, there's Moody's, and there's another company called Fitch. They downgraded the U.S. credit rating, and some people were not very happy about that. Earnings reports that came out on Tuesday were pretty much taken as negative or sell the news. That's what STN means here. Norwegian Cruise Line Holdings, Zoom, and Uber. They had some pretty good run-ups before their earnings came out, so it was buy it as it was going higher, and then once the earnings report came out, they decided to sell those stocks. The Dow ended up finishing higher, even though the S&P was down. This was led higher by Caterpillar. They reported their earnings and it was well received. Rising interest rates. We saw that in Tuesday's session. This produced concerns. The 10-year yield went back above 4%. Small caps are back below resistance. On Monday, they went above a resistance level. Well, they came back down below that on Tuesday. We're still wondering, can this positive scenario continue? The idea that we'll have a soft landing, that the Fed is almost done raising rates, and that looking forward, earnings growth will still be positive. On a short-term basis, our list is shorter now. We just have the stochastics that are extreme positive. On an intermediate-term basis, we have the rate of change going back 50 periods, the PMO studies, the Sean trend meter, and the bullish percent index for the S&P 500 and the NASDAQ 100. All of those are extreme. In the long term, we're still looking at our 150 and 200-day moving averages. They're coming down, but they're still looking fairly extreme. The dollar had a pretty good day. It was up about 0.5%. Interest rates were also up, and both of these together put some pressure on stocks. All of the yield curves that we follow still remain inverted. Sentiment is still extreme at 77. And our trend, it's still positive, but the green line continues to come down. The ADX is above its moving average. They're both above 40, so that's looking extreme. But since the green line is declining, that gives us a little bit of a warning. Our bias is mixed because we had the slight down day, and our momentum is now mixed to positive. The economic reports that came out, we had the S&P Global U.S. Manufacturing PMI. The final reading came in at 49. Last time it was at 46.3. The ISM Manufacturing Index, this was the big one. It came in at 46.4. They had expected 46.8. Last time it was at 46. The thing to keep in mind here is it's below 50, so that's showing contraction. Total construction spending was up 0.5% month over month. They had expected it to be up 0.6%. Last time it came in up 1%. Total private construction was up 0.5% month over month. Public construction was up 0.3% month over month. And when you put it together and do it on an annual basis, construction was up 3.5%. The JOLTS job openings came in at 9.582 million. That's lower than the 9.616 million we saw last time. And we're seeing an overall decline in the job openings. Here's the intraday chart. We did move down. It wasn't much of a gap. And we came all the way down, not quite to S2. We came back up, tried to get to the daily pivot. That provided overhead resistance. We chopped above and below S1. We went a little bit below, then a little bit above. We ended up closing right on S1. Looking at growth versus value, we did decline with growth overall. That's more negative for the S&P. Looking at our trend, the ADX is the dark black line here. It's above 40. It's above its moving average. That suggests there's a strong trend. The green line is on top, so that's positive, but it is declining. Here's a short-term look, also showing where the ADX is above its moving average with the green line declining. Looking at the daily chart, really not much happening here. A real slow day overall. We're wondering if we can get back up to this trend line. If we start to fall, will this pivot level hold? On the bottom, we're seeing where volume has dropped to below average. We're coming into the second day now of a new 50-day cycle. That started August 1st. We're wondering if that's going to produce some kind of a change. Sometimes it marks a bottom, sometimes a top, other times the market doesn't pay attention. We're also keeping an eye on the 61.8% retracement level for the NASDAQ. If we continue to fall, we're wondering, will that provide support? We're also keeping an eye on the NASDAQ 100. We're kind of right in between now. We're above this pivot level, but we're below the pivot level that we couldn't get through last week. We're wondering, are we going to go up and break through that? Are we going to break down? We're wondering, if we continue to fall, will the highs set back in August 2022, will that provide support? Looking at this chart, this is a little bit more negative. This is the NASDAQ 100, where we're seeing a longer-term negative divergence. We made a higher high based on price, a lower high with the PPO, which is a momentum oscillator. And again, some of that is the way it's calculated. Now we're wondering, on a shorter-term basis, is this going to turn negative and possibly develop into another shorter-term negative divergence? The PPO tried to turn back up a little bit, but it's still below the moving average. This is also a weekly chart of the pivot points, and this is what I'm trying to point out. We came right up to this level last week. That's where we topped out, and so far we're underneath that level. Is that going to produce some kind of a problem? Looking at our long-term NASDAQ 100 to Dow ratio, we're still at a very high level. We're starting to come down a little bit. Other times when that happened, really bad things happened in the market. We're waiting for this to play out. This can take a little bit of time. And then looking at the NASDAQ 100, we're still above this longer-term resistance level. I'm still calling it resistance because we haven't been above it for very long. We're wondering, are we going to break above this or break below it, or are we going to sit here for a while? And we're kind of seeing that same thing with the S&P 500. We're above this longer-term line. Are we going to break above, below, or just kind of stay here for the time being? So what's our outlook for Wednesday? There will be some earnings reports coming out. This includes Apple, Amazon, Merck, Qualcomm, a lot of big-name companies. They'll be reporting, and they can really have an influence on the market. There are no scheduled Fed speeches for the month of August. The technicals are still positive as of right now, and it looks like we're working off some of those overbought conditions that we've been seeing. But we have to ask the question, is weakness starting to develop? The economic reports coming out will get the weekly MBA mortgage applications index and the ADP employment change. We're also keeping an eye on the geopolitical events. Right now, it's about inflation and interest rates. Here's the updated calendar for the economic week so far. Please keep in mind that on Thursday, we'll get the ISM non-manufacturing index, and then the big employment situation report will be on Friday. The Stock Traders Almanac statistics for August 2nd, the Dow and the S&P are neutral to positive, where the NASDAQ is neutral to negative. Also keeping an eye on this, we're seeing the weakness in the NASDAQ in the latter part of July and the beginning part of August. We're wondering if that still is going to continue. We will be on the second trading day of the month, where during a pre-election year, these are the dashed lines, we do tend to see weakness during this time. Going back to 1950, in pre-election years, the S&P is up half the time and it's been down half the time. So what about our scenarios? Not going with the down one yet. We're still positive. Our charts are still looking okay, and they appear to be working off being overbought. But as I said, are we starting to show some signs of weakness? We tend to go more with the positive side, but we're also concerned about that weakness. But still, everything is looking okay for right now. We're not going with the sideways trend because the ADX is showing that we're in a really strong trend, even though the green line is declining. The warning signs, we're wondering, will this convergence of these short-term bearish signals finally come together? I have the whole list here. Some come in, some come out, but they don't seem to come together all at the same time. Longer-term trend signals on the weekly charts, they may be signaling a top. So far, they've not done that. We're still waiting to see what will happen there. Seasonally and historically, we're in a weak time of the month. That's the latter part of July and the early part of August. The S&P oscillators are now turning more negative, especially in the short term. We're pretty much flat in the intermediate term. We're still looking okay in the longer term, and we're keeping a real eye on the NASDAQ 100. The VIX is showing that there's not a lot of fear. The cumulative new highs and new lows for the NASDAQ continue to show weakness. Yesterday, it looked like they were showing some improvement. Now we have to kind of question that. The 3-month yield is above even where it was back in 2007, and it's still continuing to go higher. S&P growth is weakening, but it's still in an uptrend. The weekly pivot, that chart that I showed you where we hit last week, it's acting as overhead resistance. The copy curve buy signal has now ended, so we can't use that as one of our positive signals. And then earnings we take on a company by company basis. The positive signs, we do have positive seasonality and setups that remain in the background. The special K daily chart is positive, but the weekly chart continues to be negative. The longer-term equity put-call ratio is still positive. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture, and that's hanging in there for right now. Lower price levels may provide support, but we haven't really tested that very much yet. So far, we can say that support is held. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they continue to be above overhead resistance, but now they're below daily pivot resistance. They haven't been able to break through those yet. The Staples to S&P 500 ratio is declining. The Russell Index and the other small cap index, as well as the mid caps, have generated recent golden crosses. Small and mid cap growth continues to be positive, and on Tuesday, mid cap growth held up better. The Pring bottom fisher has generated a recent buy signal. So our conclusion, the S&P remains positive for right now, and so far it looks like we're working off being overbought. But as I've said 3 times now, is weakness starting to develop? We can say that in the short term as well as the intermediate term, where we're still looking positive in the long term. Thank you. I hope you found this helpful. Please feel free to check out the full-length video as well as the thumbnails. Have a great day, and I will talk to you in the next video.